all, welcome everyone. Thank you for taking your time out to be here with us and join us for this webinar today. I'm excited to present our guest speaker today, who is the owner and operator of a very large multifamily portfolio. He also happens to be one of my most influential mentors in this multifamily journey. So I'm very grateful for him and excited to have him on today. Feras Moussa is here to share his experience on how his company, Disrupt Equity, is handling the current crisis with 120-day eviction moratoriums placed on all federally backed mortgages and joblessness spiking almost 15% plus across the country. Feras will talk us through, as an apartment owner, what steps Disrupt is taking to streamline their asset management and reduce both their capital expenditure as well as operational expenses, and how they're running a lean ship on the rough seas at this time. A quick disclaimer before we get on, just educational purposes again. We're not trying to sell anything here. A quick few housekeeping rules. Any issues with audio visual you have, please let me know in the chat box ASAP. Any audio breaking up, whatever. Also, please locate the Q&A box in the application, Zoom application or the browser, and use that for questions. It just helps me stay on track much easier than using the chat box. The chat box can get pretty hard to track. This webinar will be recorded, and I send out the link to all registered attendees within 24 hours. If you're not getting it, it's probably going to your spam folder, so please whitelist my emails. I get a lot of emails about this. I just wanted to give you a few upcoming webinars that I'm hosting. April 23rd, the next one will be on how you can get some funds out of your retirement accounts with Damian Lupo. The new CARES Act, this is being really underlooked. People are all focusing on SBA loans, but nobody's looking at taking money out of your retirement account prison with the CARES Act. So this will be an interesting one for folks to learn about. Also have an upcoming webinar on providing some guaranteed returns through a crisis with infinite banking with MC Lobsher, and a college planning and savings webinar with Jeb White, who is actually a college admission person as well as an apartment investor, incidentally. Most of you know about me, so I'm not going to spend too much time here. I got into multifamily in 2017, and thanks to Feras, actually, that I decided to actually go full-time last year in January. So I am an ex-technologist coming from IBM and Atlassian. I'm also a realtor and life insurance agent now, so I focus on the infinite banking policies that I spoke about. I own and manage a rental portfolio. I'm also a multifamily investor. So I love educating people, and I run a purely passive investor group in a group called it Purely Passive Investor Group on Facebook, and also host these weekly and bi-weekly webinars. And I'm actually running weekly right now, but generally I do bi-weekly. A little bit about Feras Moussa, our guest speaker today. Feras is an entrepreneur at heart. He is also from a tech background. He graduated from UT Austin with a computer science degree and worked at Microsoft. He found his passion for real estate with his focus on bringing tech to industries that lack it, and primarily real estate is very lacking in it for folks who've been in real estate for a while. He built a portfolio of rentals and completed his 9 closings in just 12 months, the first 12 months, and decided to scale it into apartment complexes, where he met his partner, Ben Suttles, and started his company, Disrupt Equity, focused on multifamily acquisitions and investments. He leverages his strength in technology to better identify quality investments for his investors, and has raised millions of dollars for multifamily syndications. With that, I want to hand it over to Feras. Feras, thank you for being here.
No problem, Kavitha. Thank you for having me. It's definitely been exciting to, kind of see you grow and build us up kind of over the past couple months. So definitely glad to be on, and always happy to talk. For those of you that don't know me or my partner, we both love to talk about what we do. So hopefully that'll add value to everyone. I'm going to go ahead and share my screen really quick. Hopefully you guys should be able to see it now.
Yeah, I can see it.
All right. So I guess with that said, for those of you that don't know me, my name is Feras Moussa. My company is my partner, Ben, and we run Disrupt Equity. I'm going to go ahead and flip over to this. So Kavitha did a great job outlining pretty much everything about me. I went to the other University of Tech, the other Texas school, University of Texas. I didn't realize, Kavitha, you had the master's degree. So I guess you have that on me, but both of us are technologists. I'm just, lower on the totem pole than Kavitha is. From there, I went to Microsoft and I worked as a program manager. I loved it. Unfortunately, I left after 3 years. Initially, really, before I even started, I told myself I'd stay there 2.5 years, left at the 3-year mark. We were in the middle of a release, so I wanted to leave on good terms and, started a software company. At the same time, I got into real estate investing. So started down the residential track, fell in love with real estate really, and then kind of learned about syndication and multifamily and just, Disrupt Equity was born and kind of have run with that with my partner, Ben Settle, since then. And so, we've definitely been growing and, happy to hear. There's a few of our properties here. It was empty space. I figured I needed to put something in the deck. So those are a few of the kind of properties we buy, right? We're buying usually 1970s, 80s construction. And, we're looking for primarily value add opportunities. And so with that said, I'm going to run through a quick deck on kind of some of the things that we've been doing recently, right? Especially with what's been going on with COVID. For everyone else, please go ahead and drop in questions. I might go through this fast. I might go through this slow, but I think for me, most of the webinars, the real value is in the Q&A. And so that's whenever I do a presentation, I like to leave it to that because, that's whenever you kind of dig into the nuggets that you care about or people care about. And so, for everyone on here, I'm happy to answer questions, don't hesitate, good and bad. I'm a very transparent person, so I'm always happy to dig in. And so I guess, with that said, before I really dig into COVID, I want to mention one thing. One thing we did recently actually is we started Disrupt Management. And so we took management in-house, and this has been a blessing because of the timing with COVID, right? So this is something we did earlier in the year. It's gone very, very well, and we're able to basically bring our assets in-house. And, really the important thing about really any business, anything you do is about having a team, having the right players, right? And people that you can rely on to get things done and do them well, right? I like to hire people that are better than me. And then the other part of that too is tools. And so, I put Confluence on here more for the you, Kavitha, than everyone else, but really it's been a valuable tool, right? It's something I rolled out to the team. Again, I come from that tech background, so these are actually very, very common tools in tech, right? And back to kind of what Kavitha mentioned earlier, right? Whenever I left the tech world, it was really to bring tech to industries that don't have it. And I've since realized my opportunity in real estate is to leverage the things that I know from the tech world, bring those tools in and make us that much more efficient than everyone else, right? And so luckily for us, we were actually born as a remote company. We're very comfortable with being remote. And so whether we're in the office, I am in the office here today or not, it makes no difference. And so, the first one is Slack. We use that internal communication across the entire ecosystem. It's been awesome, especially even having access to our on-site managers, and not so much for me to talk to them, but to see what's going on, right? Confluence as well. And I'm going to show an example with Confluence and why that's been good. But again, it's, for those of you that don't know, it's an internal wiki tool, and it's really meant, we use it as our knowledge base. And so where we document and share things. And then the third one is Asana. For those of you that don't know what that is, that's a task management tool. Again, we use a lot of different pieces of software. These are the three biggest ones that I'd say we use pretty much daily that came to mind. And so, I'm glad we were able to build out the management company beforehand and have all these implemented. And then, you'll kind of see why here shortly, right? And so, we had that going, things are humming along, and then kind of the current COVID situation happens, right? And from the get-go, once kind of things became clear to us, hey, this is something that's probably not going to go away, right? I remember Ben and I, we threw ourselves in our conference room and basically started to put together a game plan on what we want to do across all the properties. And in this presentation, I'm going to go through some of those and kind of what we did for each of them, right? But I think whenever any problem is encountered, right, I think it's really important for people to identify what the problem is, right? Get over the shell shock, the fear, all of that stuff, but really talk about what is the problem and the impact it's going to have, and then figure out how do you get ahead of it. And the third part of this, right, because, for us, what we do is syndication, right? We only exist because our investors like, know, and trust us. And it's important to communicate to investors, right? Good, bad, and ugly. That's our philosophy. And so, with that said, right, the very, very first thing that was important to do is manage all money being spent across the company, right, or across all properties. And that includes CapEx, rehabs, turns, and more. And so the very first thing we did, we said, hey, let's pause all rehabs. Let's basically stop, let's pause all rehabs is the first and most important thing. right? So anything that's not essential, we've all heard that term, let's go ahead and not do that, right? And so focus only on the essentials. The other part of the expense side too is turns, right? A lot of the money on any property is, going to unit turns. And so we were focusing a lot on, hey, can we get tenants to renew where they are rather than leave, right? Just so we don't have to spend the extra $1,000, $2,000, $3,000 turning that unit. For those of you that don't know what a turn is essentially, what the work is to get that unit from vacant to rent ready. A lot of times it's cleaning the carpets, cleaning and shampooing the carpets, painting the walls, maybe resurfacing countertops, things like that, which is separate than doing any upgrades to improve it, right? And so before COVID, we were getting a good pop on our renewals, right? We had, the property as a whole has improved, the tenant base had improved, and we were able to get $25, $50 rent bumps on the renewals. Well, one thing we did is said, okay, let's not be pushy, let's be flexible with tenants. And so because to us, right, maybe we get $50 less a month, but that's $600 a year that we are going to collect less. But that's better to get $600 less than spend $1,000, $2,000 to get that unit ready. And so again, just trimming the fat, right? And again, because we manage in-house, we were able to do that really quickly. I remember doing this with a different property management company, and it's just, a lot of knick-knack, whereas for us, we got the team in the conference room, said, here's what we're doing, and how do we start to execute, right? And so I think that was the very first thing, because we don't know if this is going to last for a month, 2 months, 6 months. And so I think for us, the biggest focus is about building cash reserves, right? And then the other part of this, I guess I didn't include this, was really we filed as quickly as we could all of the draws that we could for all of our properties, right? Because that takes a month. And so for those that don't know, a draw is essentially a request with the lender. Usually the lender's holding onto money from us, whether that be replacement reserves or CapEx reserves. And, we submit a request, and it kind of takes a month for the back and forth to get that money. So we submitted that at, very kind of like the second week of March. And again, you're shoring up cash reserves, because if we're going to essentially collect less money for the next 6 months, how do we make sure that the deal is safe, right? The first and most important thing is making sure that the deal is safe, sound, and we're not having to go out and get more cash. And so that was the first and most immediate thing we did. The second part of that too is managing payables, right? And so figuring out where is money being spent. Are we paying for things too early, right? So if something is net 60, well, we don't have to pay it in 20 days. We could wait it out for 60 days. And just being strategic on how you're paying your payables, as well as what, fat are you able to trim with those. And so that's a whole big initiative in itself that we undertook at the company, and kind of working through that. The next thing we did is, now that we got the basis going, right, how do we keep our staff safe? What does that look like? What is our office policy, right? Is our office open? When is it open? Or, if a tenant wants to go and tour a unit, how do we enable that, right? And so kind of some of the things we did is basically the office is closed, people can make appointments, and people can, can actually request to get tours, and we give them a key and they can go tour the unit, right? There's a lot less person-to-person kind of being close, as well as just being strategic in how we follow up with people. And then the other part of that too was we shifted, instead of doing any maintenance requests, right, we do the emergency ones and then review them case by case, right, to have less time of our maintenance people inside of a unit with a tenant. And, it's important to communicate all this to a tenant and why you're doing it, right? So that now we're, we have cash, we're managing how we're spending it. And then now we're keeping our staff safe, right? And now the next really, and this is honestly to me, one of the biggest ones is, how do you manage your tenants, right? We are not slumlords, right? We make revenue, we make profits because of our tenants. They are a big part of our business. They are our asset. And so rather than say, hey, rent is due, and be that landlord that has that picture on the news about, hey, rent is due no matter what. Instead, we've taken an approach of basically teaching our staff how to work with tenants. And this is really, and by teaching, I mean, it actually took some back and forth to teach a manager, how do you work with a tenant? How do you kind of question them? How do you help make a win-win solution? And so for us, it was things like, a couple of different things. And so first and foremost, figuring out who lost their job and kind of having them prove that, just to get the people that are taking advantage of the system out of it. And then from that, figure out what do timelines look like? How do we help them help themselves, right? And so really building out a strategy to help the tenants and identify who the people are that need help. And so then with that, we spent a lot of time collecting resources and in communicating that to tenants. And I had a third thought about this, and it just totally slipped my mind. Oh, it was just, I was going to say, we already can't evict them. And so I think for people that are being extremely aggressive with collections, I think that's going to work against them versus being helpful, show the tenant that you care, right? They will have a lasting income impact, and they will get their, they're going to get their stimulus checks. You're going to get other ways to pay you versus, if you make it combative early on, I think people are going to, regret that, because now that tenant, even though he has that $1,200 stimulus, he's not going to pay his rent, and you're stuck with them for a couple months. Right. And so we spent a lot of time. So Kavitha, I think this probably looks familiar to you. This is one of our pages from Confluence. Right. And so we actually have a Confluence space that our tenants can go access, and we've been updating it continuously. And so in here, we have a lot of resources, because what we realize is even with the things like the stimulus checks, unfortunately, a lot of people, there's just been so much miscommunication, I think, across Facebook, the news around the stimulus checks, around the SBA programs, all of this, that people don't even know what they're going to get. And so for us, it's been about how do you educate the tenants? How do you give them resources, links, and, kind of be that trusted friend of theirs? Hey, you lost your job. Okay, that's unfortunate. Well, here's some resources. Here's who's hiring. You will get a stimulus check. Here's how here's when you can expect it. Here's what that looks like. And really, showing them what charities are out there, and kind of building that friendship. And so this is just one of the many screens that we have. I just wanted to show it as an example. Right, where, we spent a lot of time collecting this, and as things come up, we continue to add to it and continue to share it out with our tenants, right? But that's been great because, we have a lot of promise to pays coming up tomorrow, actually. Yeah, I was waiting, I'm curious to see what our collections look like tomorrow. And, that's been a big part of that, is because we've been working with the tenants, helping them figure things out, helping them know that they're going to get the stimulus checks, right? You'd be surprised, these tenants that, a lot of them make $30,000, $40,000, $50,000 a year. Some of them think they're not going to get a stimulus check. They literally say, "Oh, I'm not qualified for that." And then it's like, well, no, actually, you are qualified for that. Here's why you're qualified, and here's to know about it. And so that's been, for any operator, I think a lot of people don't think about the knowledge-based part of the business, but to me, that makes life so much easier, and it's really important. So we've seen a lot of value from that.
I think I agree with that, Feras, because we've done the same with a lot of our apartments where, with the unemployment being expanded for self-employed and independent contractors, a lot of people don't know about that because they feel like they have to be laid off from a job to actually qualify for unemployment. And that's helped a lot of tenants get through and get, more of the more than just this, a one-time stimulus check. They actually qualify for unemployment.
Yeah, absolutely. People don't even know Amazon's out there hiring 100,000 people. I mean, there's ways to find a job if you want to try. Now, there's other people too, but it's about just creating that awareness. And so, collectively across the company, we all come across a lot of different resources, and we've been good about essentially what we have internally is we post it to a specific Slack channel that we then have someone else on the team that knows. So if a link gets posted there, they go figure out what it's about and post it to the resources. So. And again, that's a system upon itself, right? How do you help facilitate all that? All right. So the next thing is the plan to collect cash. And, I kind of hinted at this a little bit, right? But now, what does it look like to collect cash? So we did things like where we did anyone that paid by the first, we had them in a $500 drawing. Anyone that paid by the third, we put them in a $250 drawing. We collected a lot of money the first 3 days. I was actually kind of surprised to see. Right. What I wasn't sure about is how much did we just shift people paying that would have paid a couple of days later to be in the first 3 days versus improving collections. And so only time will tell, right? We'll see how that happens over the rest of the month. But doing things like that. And now the next month is actually different, right? So for us, we were just talking, we had a team meeting yesterday and we were talking through this, right? What do we want to do next month? And next month is the critical month because my philosophy is I was less worried about April collections. It's really May collections that I'm most concerned about. And so we're doing a completely different approach, right? We're not putting them in a draw. We're actually giving them discounts if they pay early and, giving people an actual cash incentive rather than hoping they win a drawing. We're giving them monetary incentives to collect. That's one aspect of it. The other aspect of it too is now whenever you need to, someone's not paying, right? How do you work with them? What does that look like? How do you figure out who you should work with and who shouldn't, who's just trying to take advantage of the system? Right. And, how do you notice them? Right. And how do you do that effectively without getting yourself in trouble, without getting on the news and, being stern but friendly at the same time where needed. So that's been, a little bit of a balancing act, but I think that's, again, important. It's not like any other month where you just, wait for people to come in. I mean, we've been very almost, I want to say anal with our staff around knowing every single delinquent and having notes on every single one of what's going on and getting us updates daily. And so, and I think this next screen is going to show it, but, this leads to tracking progress daily, right? On every single deal, my asset manager posts us, charts and tables of what's going on with that deal, with collections relative to the same point in time, the last month. And so we had, for actually all three of for our Texas assets, for all three of them, we had the best month ever last month. And actually, I think across our entire portfolio, March was the best month we've ever had, I think, on every single deal, right? And so now March has really set a high bar, right? And so it's been interesting to kind of track that. And so on this screen, I show just a little bit of snippet, actually. I went and grabbed that. This is from a few days ago to see where have our collections been relative to the same point in time. And so really the bottom section is the most important, right? You can see for kind of these three deals, we're at 89% collections of where we were the same point in time last month, 95% and 87%, right? So we're about 10 to, from 5 to 11%, from 5 to 13% less than what we had collected last month. But this is actually really good. Talking to other people, I think some people are in the 20s. And so I felt really good seeing this because I know we're not far off. And really, I'm most curious to see what happens after tomorrow because we have a lot of promise to pays. And so we actually might get almost to where we were the same point in time last month, which was already a really good month. And so again, being systematic, being methodical about tracking your income, tracking what's happening with delinquencies, tracking what the staff are doing, right? And I think a lot of owners are, they just kind of sit back and hope the property manager does all this. But even with third-party property managers, you need to talk to them and communicate. And I know this firsthand, and you need to explain to them what your expectations are because they all have their own approach, but it's a lot more laxy-daisy, right? To them, if the property only collects 80% of where it ends up where it was before, well, that 80% you're making no money. You're essentially, you might be even in the red sometimes, right? They don't care. It's not their money, right? They're not the ones that are going to have to front it. You are. And so that's been, really important for us and something I look forward to that email every single day. And so I should be getting it in the next 2 hours to see where we are as of today. And then last but not least, communicate to investors, right? I think this is, you get, and even myself, we're guilty of this at the company. And I was just talking to my partner about it yesterday is we need to, you get so consumed in what's going on, right? It's almost harder to step back and, spend the time to write out an email, especially, we have to get one for every single property. So, it gets cumbersome, right? Our asset manager's already bombed and we're bombed. So, but it's important. And I think investors love that. And so, we communicated early on what we've been doing. We actually sent out our investor updates as well yesterday that we send investor updates every month. Well, in addition to that, we did a mid-month update that went out yesterday talking about what's going on with these properties, showing where we're at and getting people comfort. And I was actually surprised about how many investors had reached back out saying, this was awesome. Appreciate you guys, working hard. I'm glad you guys updated us, etc. And so again, you build trust by communicating, even if it's bad. So I tell people, don't hesitate. And here's just an example of the one that we sent out. So this is one of our properties and, talking about where we're at in collections, what we've been doing, and, what the outlook looks like. And so to me, those are the biggest things as kind of I sat down, I spent, some time putting together this deck, thinking about what have we been doing differently, right? And that's the important thing is what have we been doing differently that we haven't been doing before with kind of managing through what's going on with COVID. And there's a lot of other things on here that aren't on this list that I didn't talk about, right? What happens about the SBA loan or the paycheck forgiveness, right? What are you allowed to do? What are you not allowed to do? TBD on those, right? But, needing to spend a lot of time working with, your mortgage broker like an Anton, working with your bank and understanding, what the options are. That's been a big focus. Figuring out as well as kind of payroll, right? What do we want to do? Do we want to have people, work a few less hours just to reduce our payroll costs so we keep everyone on as well? What does that look like? What else do we want to, another thing we did is just, pushing everyone to pay online, covering the cost of the, allowing credit card payments, things like that, right? You start to get creative just to open up more doors for people. And so there's a lot of other things I didn't put, but to me, these are the biggest impact ones that we've been doing that I think is, really valuable for people to keep in mind.
Hey, Feras, how are you? I mean, this was really good list of things. How are you handling leasing and renewals? Are you doing something different in terms of what, the
Yeah.
target rents were versus what are you shooting for right now with
So
leasing, and how are you handling renewals?
no, that's a great question. So, definitely for anyone who has questions, please go ahead and, go ahead and put them into the chat. I will definitely, we'll take a look and see what people are asking. For leasing and renewals, to answer your question. So for renewals, we've been really strategic about getting people to renew, right? Giving them, if they want a painting offer, really kind of going down the ladder and figuring out what do people want and how do we get them. And so, we've been less particular about having to get the extra renewal amount, right? It really depends case by case. So if a person is 150 below where we are, we're going to try to get that. But if they're $50, I mean, right now we don't care about that. And so, because renewals is really important. And I think that's the place people get burned the most. It's called the backdoor problem. How do you fix the backdoor? Even if you have people coming in through the front door, if everyone's leaving through the back door, not renewing, it's really hard to maintain occupancy. And right now, maintaining occupancy is critical. And so we've been really particular with having a plan for renewals. And then on the leasing side, I was surprised. We've actually been getting leases. And I think part of that is because we're open, right? Other places haven't been open. They just shut down. And so being strategic with not lowering our bar on who we want to allow, because that'll have other impacts later, but on the pricing. I'd rather get a good qualified person in at $50 less than we were before. And so for us, we've been doing it case by case, depending on if it's a 2-bedroom, 3-bedroom, and what our availability is. But luckily, we haven't had really any issues on the leasing side so far, right? We'll see kind of where things go over the next next couple of weeks.
And how are you doing the showings? Are you leveraging technology, like doing 3D tours, or are they actually the tenants are walking through on their own? How are you handling that?
The units, they can go get a key, they can go, take a look at the unit itself, because I think it is important for a tenant to see the unit that they will get, right, in addition to the model. And so, we already have pictures online. We have not done a full virtual 3D tour, and honestly, personally, I don't see as much value from those. Those are a cool thing to show, but is there a big impact? I'm not sure, right?
So how are you protecting your staff, like the apartment staff, from exposure when you're doing these?
A couple things, right? So I think I mentioned earlier about the maintenance request. Right now, it's emergency only, and we've told the maintenance guys only go in one person. We had a situation where 2 or 3 guys are going into the unit. Let's not do that. So one person's going in. Emergency requests only. So the maintenance guy is not in there. And then on top of that, we try to do it whenever the tenant is not around too. So try to understand if the tenant does have a job, what times are they not around, just so the person kind of have it on their own. Then on the office side, the office is not just open, right? They have to go knock. A person will come around, kind of keep that distance from them, and the whole world is just not allowed to come into the office.
Gotcha. And from an investor standpoint, are you considering withholding distributions just so you maintain your cash reserves?
So right now we did decide to pause and wait and see what the next month or two look like. And luckily, most of our deals, we have pretty good reserves in general, but it's more so, my concern is more so, what if this lasts for 9 months, right? And we're collecting 85% for 9 months, right? What happens in that case, right? And so, we're kind of in a wait and see, and then we can start that back up. It's kind of where we're at. Gotcha.
Makes sense. So we have some questions. So let's take this time. What percentage were you able to collect in April?
Yeah, so far, I think as the picture I showed earlier, we're roughly about 90% of where we were at the same point in time in March. And so I think that's actually pretty good. I was actually happy about that. And so I'm more concerned about May. So come back and ask me in May, and then I'll either have a grin on my face or not so much of a grin.
Let's hope you do have a grin on your face. What is the liability if someone gets infected on the job?
Man, that is a great question. I think that's the $1 million question that all businesses are wondering. I think nobody knows, right? And so, we've been careful to not tell people they have to do something. I think, this one, I just don't know. I'm not an attorney, and I think nobody knows right now. And I think personally, what I'm most interested to see after all of the kind of current virus situation settles down is all of the different litigation that's going to happen, right? And, between someone getting infected, not infected, between, deals blowing up, between, company A didn't, Starbucks didn't require masks, and then a customer gets infected. Well, what does that look like, right? It's going to be interesting to see where that goes. And I think the lawyers are going to make a ton of money over the next year or two. So I think some of this is going to take multiple years to even sort out. I mean, I think it's going to get really messy. So
Yeah. All right. A couple more questions here. For us, what kind of marketing do you do to drive traffic?
So that's really deal specific, right? So we do use apartments.com on most of our deals. Craigslist is definitely one. I love the properties that I have that have good traffic. I mean, we have one of our deals in San Antonio, 125,000 cars pass in front of it every single day. First thing we did was get a brand new sign instead of a brown one that you can barely notice. We got a nice big and red. You can see it from far down the highway, really, blanket that. That's a big part of it. And, being strategic and understanding where your traffic is coming from. And I think a lot of people drop the ball on this. Almost every third-party management company I've talked to does, because they all say, oh, it was a drive-by. But no, dig in and really understand, where did you source that person and how do you go find more of them, right? And so for one of our properties, we're right next to a company that pays well and, that has a lot of employees. And we've had our staff go there, give out little gifts and baskets and flyers and, show the love, right, to help attract more people. And another one too is just tenant referral programs, right? Usually the best tenants are ones that are referred by their friends and they want to live in the same community because they enjoy living in that community. And so, we're big on doing that as well and having a program for tenants to help refer their friends on. That's just kind of a couple of examples, right? We've tried Facebook. I'm not as sold on, right? Just general Facebook marketing, right? It's not as sold on the Facebook side. We do it a few times. I'm at the point where I'm throwing that away. I'm not letting anyone spend money on that until we actually build out a funnel and a proper way to track every single lead to know what was effective or not. I think those are kind of the biggest ones.
So are you finding that a specific kind is better than others right now with the current situation? Because what we're seeing in some of the apartments, that online traffic is increasing, obviously, and the drive-by traffic we used to have is reduced. So are you seeing something similar? I know your properties are across the board, but
mine definitely. Drive-by is kind of doing well because, again, not everybody's open and people are still driving around, right? And we had a sign up saying we're open, right? So
Gotcha.
People know that they come knock and someone will be there. So,
all right. So I think some of these questions are similar. How do you fill in vacancy during this period? I think you kind of answered it, but if you want to just rehash that one.
Yeah, I mean, it's keeping up with your renewals and, attracting new traffic, right? And, putting in new programs. And so I think that's a good lead way to a question that I see up here later, which is, what do you offer for tenant referral incentive? That's property specific, depending on where we are on the occupancy. We've done things from $250 to, $600 gift cards, prizes, discounts, things like that.
Let's see, what else? What do you do with a delinquent tenant who's been delinquent even before the virus outbreak? I'm guessing not much you can do right now.
With delinquent tenant who has been delinquent even before the virus outbreak, and I guess are you referring and they are currently still delinquent? I mean, that's the hard one, right? I mean, if they're already delinquent and you're already going to evict them, but now you can't, what do you do? I mean, TBD, right? You try to, in the end, you want to see if you can get that tenant to pay. Hey, I know you didn't want to pay, but how can we work something out, right? I mean, it's just really not much you can do, unfortunately.
Sure. All right. What are you looking forward to most in the next 1 to 2 years as a deal sponsor? That's an interesting question.
So for us personally, we have other initiatives at the company that we've been building out. I'm excited to get those rolled out because they all kind of start to play well together. And the other thing too is really, I think the fall is going to be a buying spree. I think you're going to start to see a lot of deals that were managed poorly by poor operators, poor property management companies, as well as we're just too tight, right? They're modeled on a $200 rent pop, and now they're not getting any pops, or they're getting $50 pops. They're not going to be able to get it. I think a lot of these deals are going to come around the market. We've been kind of shoring up relationships and making sure we want to be the first person people call. We've already started to get some of those calls. Literally, we've had, and I feel bad because I didn't call a broker back today, but there's this one property that like 3 different people are kind of pushing on us, trying to find those. So I think we'll be able to go on a good buying spree in the fall. Now, we're doubling down on all the other initiatives across the company, just getting that much more effective across the board.
So are you guys planning to hold on till fall to see the deals come through?
I mean, I'll buy a deal today if it's a good deal, right? So,
Right.
it's I think most of the good deals will start to show in the fall, because by the time, people realize the deal's not performing, they stop paying their note, they start to get foreclosed on. I mean, that's going to need a few months, right? And so for us, we're always in buying mode. It's about, is it the right price? And, is the deal realistic? And then, but personally, I just expect the fall to be the time that we start to see, we'll probably pick up 3-4 deals in one go. So we'll see.
Yeah. Yeah. I think I'm hearing the same from a lot of operators. It's like it might be shopping time.
Yeah. So.
Okay. I think we already spoke about this. How do you manage showings in the COVID situation? You addressed that already. When looking at potential acquisitions, what is the break-even occupancy you're looking to hit with the current versus pro forma rents to ensure that you can weather 10, 15, 20% no pace?
So so most of our deals, though, that's a good question. I think it's called risk analysis, right? Everyone should do it. You should look at it. And on top of that too, the other thing that I see too much is that too many sponsors just want to go max leverage, max IO, whatever. And another thing you can do to take out risk is go in less leverage, right? I think most sponsors are scared to go in less leverage because it means more money that has to be raised. But we have a deal in Atlanta, retreat at Stone Mountain, Kavitha, where we decided to go in 65% leverage, right? Our note on that deal is so small compared to the amount of money that is generated from that deal, right? And that's, it's been interesting to see, because that's the lowest leverage we've done. And we had investors that'll invest 150,000 in every deal. They came in 300,000-400,000. The first day we had 3 guys. I'm like, hey, investors that are savvy recognize that. And so I think structuring your debt is critical to understanding the risk and then playing with it, right? Most deals should be able to support 20 to 30% economic. I mean, we had a deal that was 40%, somewhere around there. And so, for us, any deal we're buying, we do make sure that, hey, what does it look like? No one expected a virus. No one planned for a virus. And anyone that tells you, oh, I knew this economic downturn was going to happen, I think is full of it, right? The virus was unpredictable. It happened, right? So it's more about, did you mitigate the downside effectively in terms of whatever could happen, whether it be a virus or a slowdown? And, are you resilient?
Makes sense. So Didi just remarks that I've heard Facebook market free has been very good for marketing.
I've actually heard really good things about that. And that's funny that Didi mentioned that, because literally last week I was telling the team that we need to add it to the list of the things that we are posting every few days. And so that one, I've heard good things about that as well. So we're going to try that in tandem with the Craigslist posting.
Got it. Makes sense. Tanvir says, how many assets do you have and where are they located? How big is your staff and where is your main office? How do you manage out-of-state assets if you have any?
Yeah, so we've had 9 different assets, staff-wise. So once we bring the rest all in-house, with on-site staff, will be probably about 70 people. Right on the back office, we have about 10, 9, 8, 9, 10. I missed, there's a third part to that. It's how do you manage remotely? It's about, again, we're a remote first company. I'm a tech background. And so we're happy to be remote, but it's about buying in markets where you can get out there if needed. And so we have a portfolio in Atlanta. We love Atlanta. I like Atlanta because I've done this many times. I'll book a 5:30 a.m. flight out to Atlanta, spend the day there, and then I will be on the 7 p.m. flight back. And I can, I wake up in my bed and I go back to sleep in my bed. And so, and having a team that's willing to travel. The president of my property management company, she has no qualms. She'll fly out to Atlanta on a Monday. She'll stay there till Friday and come back, right? So being able to do that and have staff in your market that you trust as well, and that's critical. And we've had staff that'll go to other properties to help out as well where needed. And so being smart about that.
Awesome. I think Didi, he answered this. Didi says he likes to use tenant referrals to get lead, but I did not hear what he offers the tenant as an incentive. I think you answered that, but if you can just recap.
Yeah, so the answer to that was it's property specific depending on where we are with occupancy. And it's, $300 to $600 is kind of typically what we offer. It just depends on kind of the situation.
Gotcha. Tom asks, how do you plan to collect from tenants after 3 months? So after that 120 days, if they're not paying right now? And and Avi asks, what's your plan for eviction of non-paying tenants? You can't evict them if you're using a agency loan right now. So I'm assuming after 120 days, that's going to pile up.
Yeah, so you can't evict them regardless. I mean, most states like you can't evict. No, the eviction courts are shut down, so you can't evict anyone if you wanted to, regardless if it's agency or not, right? I mean, I think the plan to collect from tenants after 3. I mean, you want to work with them during the process, keep them, accountable, have a plan with them, right? For those that don't, I mean, if evicting is definitely something you're going to have to pursue. Right, it just depends on it's a case by case. So it's not like we have one blanket strategy. Our strategy right now is how do we work with the tenants, have them, pay up, pay partial. We are taking partial payments, right? Get them heading in the right direction and seeing where things are at in 3 months, and then from there, kind of figure out what needs to happen. And then best guess on lending. I think the biggest problem right now on the acquisition side actually is how much uncertainty there is with the lending side of things. For those of you that are interested in that, I mean, there's a lot that's changing, right? And specifically around what it looks like. The interest rate is the least of the concerns. It's more about how much reserves are they requiring now? What does that look like? What does that impact on the return side? How willing are they to give interest only versus not give interest only? And so that's a very dynamic, fluid market, and I definitely recommend talking to your insurance, your mortgage broker about that. I think Anton Paul would be a great person to go speak with.
Yeah, actually, we have a webinar. I have a webinar I did with Anton, I think last week, or was it a week ago, 2 weeks ago, where he actually walks through what the changes are in terms of, the lending changes as far as the reserves are concerned, and also how it's going to affect lending. So please look at my Facebook channel, YouTube channel, to see the webinar recording, and I'm happy to send it to you. Okay, this one's interesting. How do you determine what is the right price when underwriting? Are you using T3 or T12? How much sense does any of it make right now?
A lot of it makes sense. It's really deal by deal, though, right? To me, it's honestly no different than it was before the virus, right? Because it's about, at the end of the day, it's about how profitable is that property, right? And you're basing that based on what the deal was doing. And so to me, you got to look at the T3, look at the T12. And if it's a deal that was in a big lease up, I mean, we have a deal that we bought where the T12 was irrelevant because the property went from 50% occupancy to 80, and we're doing the rest of the work. So the T12 is actually not very relevant, and T3 is more relevant, right? And so I think the virus situation doesn't really impact it unless you're asking the question of, over the summertime, do you look at T3 and T12? Meaning, if I was looking at a deal in July, right, how do I look at May, June, and April? I think it's TBD. You need to just dig in and understand what happened, what was the economic, what were they, what was their gross potential, and how did that impact?
So are you saying that you would still pay based on the gross potential and not necessarily on the collections? Let's say,
no, you
buy property in July.
Go hand in hand. Maybe my answer is that there's not a definitive answer, right? You're going to have to look at the deal case by case and figure out, what were they billing? Is that still likely to move forward, right? Mm-hmm. Yes, no. What does that look like? What was the collection? I mean, and I'll give you an example. If I was buying a deal and I saw a huge spread where in April they weren't able to collect, they collected only 60% of the rents, right? That tells me the tenant base is poor quality, right? I would factor that into my pricing. Versus if they collected almost the same amount, that means it's actually a really good quality tenant base, right? And tenant bases make or break properties. And we've had a deal where we did a full turnaround. We took the occupancy down from 80 to 40% back to 95, right? The tenant base went from a very poor quality tenant base that, we had an delinquency to a property where we had very low delinquency. And so I guess maybe I would look at that and factor that into my pricing, but it's really deal by deal to kind of understand, T30 versus T12.
Yeah, makes sense. All right. I think this is the last question. How are you looking for off-market deals? Savion asked if you're skip tracing LLCs, how are you looking for these off-market deals?
Yes. So for us, most in any market, and you keep hearing, oh, we got this deal off market. To me, that's most of the time at the size that we're looking at, anything, 100 to 400 units. Off market is such a misnomer, right? I don't really buy it. Everything goes through a broker pretty much, every deal right now, right? In the past couple of years where it has been a hot market. because it's, as a seller, it's reckless to not use a broker, right? Maybe you're trying to save a point or two, but that broker will get you top dollar. He knows who's hot for a deal and who's not, who's willing to pay top dollar and who's not. And so for us, we don't really have an initiative around how do we skip trace or do mailers or any of that. I know that's successful for smaller deals, for the 30 to 60 unit range. We're usually looking at bigger deals and it's not as effective. So for us, instead, it's really, how do we take care of our brokers? How do we be the best buyer they've had? How do we make ourselves available? How do we be transparent with them and be that first call that they get? They're going to call. So that's been effective. That's been our strategy.
That makes a lot of sense, especially right now. Probably time to establish or start working on those broker relationships. So when the deals come, they actually
those take years to form. And so
right,
I was glad whenever once all hell broke loose a couple of weeks ago, I had 3 different brokers call me the same week and just say, "Hey, how are you guys doing?" Whatever they call you, that's a good spot to be in, right?
Yes.
Calling, getting an idea of where we're at, are we buying or not, and kind of getting feelers from them on what deals are coming up, maybe what they think is going to happen, and reminding them that, hey, we're still buying, if it's the right deal. And so we look at a ton of deals. We have a huge pipeline on acquisitions and kind of getting things through the process just to make sure we can underwrite more deals than anyone I know. And that's a big part of the business. But right now, it's always going to be with the brokers. So.
Okay, I think we got one more question in. Do you have the same GP group you work with? What does your fundraising pool look like? Yeah,
so that's a good question. I mean, it's very deal specific, area specific. And so, some deals are good fits for certain investors. Some deals aren't, right? I mean, we have a group that I know if we have the right A-, B+ deal in certain markets, they'll bring $10 million check sizes to it. Other deals they don't. And there's other deals I've asked them about that are great deals, but it's not really their risk appetite. So on the GP side, it's deal specific, just like it is on the LP side. So,
gotcha.
I like to say we're glorified matchmakers. We match deals to LPs and GPs. So.
That's awesome. Awesome. I think that's it for tonight. Thank you so much, Feras, for joining us today and sharing your thoughts on this. Thank you, investors and people on the audience for joining us today. I hope this webinar was informative and helps you with your own investments if you are a syndicator, or helps you ask better questions to your sponsors if you're a passive investor. Thank you, Feras, for taking your time out of your busy schedule. Is there another question? Okay, that's it. Okay.
If anyone has any questions, feel free to email myself or Kavitha. Kavitha is a source of knowledge in herself, so maybe one day I'll interview her.
Thank you so much, Feras, for taking time out to share your thoughts today. Have a good evening, everyone. On a positive note, I don't know if many of you have seen, but the stock futures just went up pretty big time because there's a lot of COVID-19 optimism that there might be a vaccine soon on the horizon, and also the talk of the economy reopening. So we keep our fingers crossed and hope that this happens soon. Meanwhile, do what you're doing and stay healthy and happy. Thank you all for joining us today. Have a good evening.
Thank you all.